5 moneymakers behind rental real estate and how this asset class can help you build wealth incredibly fast. The entire list in this video, so let's get right into it. But really quickly, before we do, if you haven't done so yet, or if you happen to be new here, welcome to the channel, and please make sure to hit the subscribe button right down below the video. Thank you, I really do appreciate it. Let's get right into this. So if you're new to rental real estate, or just real estate as a whole, you're going to learn very quickly that this asset class is incredibly powerful and can help you build wealth very fast. In fact, a lot of fortunes have been built just on real estate alone. So with that being said, I'm getting pretty excited. Let's get right into this list. Number 1, cash flow. So cash flow is simply the difference between rents received and expenses going out. Let me give you a quick example. Let's just say that you own a property and you rent it out for $1,500 per month. Meanwhile, you have expenses on the property of $1,000 per month. Therefore, you take the $1,500 that you receive, you minus off the $1,000 of expenses, and you are left with $500 of positive cash flow that you get to stick right in your pocket. Yes, positive cash flow, $500 per month and or $6,000 per year. Now, just to be totally clear, every single property is going to cash flow differently. This is just an example, okay? So just because I'm giving this as an example does not mean you're going to go out today and buy a property and cash flow $500 per month, okay? Just a quick example. So cash flow is number 1. Number 2, appreciation. Now here's the thing with real estate. It is just like any other asset class, as in bonds, stocks, ETFs. It doesn't matter the asset class. All of them go up and down in value. However, over long periods of time, real estate ultimately goes up in value. So, of course, we saw the crash in real estate way back in 2008, 2009, things like this. But overall, over the long periods of time, years and years, real estate ultimately goes up in value, therefore appreciating in price. So if you just so happen to buy a property today, even though the market is really hot right now, even if you bought a property today, pretty much like at the highs of the market, wouldn't be probably like the best idea in the world, but if you did, at some point in the future, maybe 5 years from now, maybe 10 years from now, that property is most likely going to be priced or valued significantly higher than what it would be bought for today. Now, of course, we don't know what's going to go on with the real estate market anytime soon. It may pull back, it may crash, who knows what happens, but ultimately, over the long period, it'll ultimately be worth far more. Now, again, there are some caveats to that. I mean, you could buy in some obscure town that is going out. There's people moving out of the town. I mean, you want to take advantage, or you want to pay attention to that too, just to know, like, is this a town where people are leaving or are they coming to it? Do people want to live here, or are people bailing left and right saying, I'm out of here, I don't want to live here anymore? Well, that would also influence the value of that property at some point in the future. One quick side note about real estate as well. In most situations, real estate is one of those asset classes you're not buying it today and selling it tomorrow for the most part. Now, some people do this. They buy houses and then flip them like 2 months later. Some people do that. But for the most part, real estate as a whole is more of like a longer term hold. Typically it's something you're holding on to for several years, maybe 3 years, 5 years, 10 years, maybe 15 years, or maybe even more in some instances. It's a longer game. In most cases, not all the time, but in sometimes it's a longer game. All right. So we have cash flow, we have appreciation. Next is number 3, we have debt pay down. So now you probably understand what this is, but let's run through it. So again, let's go back to our original example. You receive $1,500 in rents per month. You have $1,000 in expenses per month. Let's just say the $1,000 encompasses a mortgage, just for example. Within that mortgage, you have principal, interest, taxes, and insurance in most cases. Well, within that $1,000, even though principal is in there, you're paying down a very small portion of the principal each and every month. It's probably not much, probably only a couple $100, maybe $250, maybe $300 at most. originally at the very start is probably going toward principal. But either way, it is still a couple $100 going toward principal. Now that money is not going into your pocket, but ultimately your tenant is paying down your debt. Therefore, is ultimately money that it will come back to you at some point in the future when you sell the property, but ultimately it is still money that you are technically building your wealth, and somebody else is paying it down for you, right? So that is one other way. Debt pay down. All right, that's number 3. Number 4, the tax advantages of owning rental real estate. Now here's the thing. I study the tax code very closely. I know there's not many people that study the tax code. It's something that I really enjoy doing. I'm not sure why. I've been doing it for quite a few years now. It's just something that I find really, really interesting and fascinating. Again, I don't know. I have no clue why I enjoy this. I just really enjoy reading the tax code. It's something that is just really weird about me, but I enjoy reading the tax code. But here's the thing about the tax code. It is set up in such a way that the IRS and the government wants you to do certain things. If you do certain things in a certain way, you get advantages for that. Well, one of the things that the government wants you to do is supply housing. If you supply housing, they give you massive tax breaks for doing so. It is not doing anything illegal. It is not going through loopholes. These are legal things that the IRS has set up within the tax code that you can take advantage of if you own rental real estate. Again, it is right there in the tax code, 100% legal. They have it there for you to take advantage of. So, if you own rental real estate, for the most part, you probably will pay 0 taxes on your rental income. The reason being is mostly because you get to write off anything against that property that is an expense against that property. For example, any of your insurance, your taxes, your interest, your maintenance, repairs, depreciation, property taxes, association dues, utilities. I mean, it goes on and on. Legal expenses, commissions, cleaning, maintenance. I mean, the list goes on and on of all the different things. Your mileage that you get to go back and forth to the property, all that kind of stuff, you get to write off all of that. At the end of the day, also, you get to depreciate the property over a specific period of time. So with all of that added up, that $500 of cash flow that we've been talking about over each and every month, yeah, it pretty much gets wiped out with all of your expenses and then depreciation on top, like the big old cherry on top of the sundae, right? Yes, so even though you're getting cash flow, for the most part, you're going to pay 0 taxes on it in most situations because of all of the expenses you get to write off, as well as depreciation that you get to apply against that property. Now, again, I am not your accountant. I don't know your exact situation. I cannot give you accounting, legal, tax, or financial investment. I can't give you that advice. But basically what I'm saying, talk to your accountant. If you invest in real estate, rental real estate, and you are renting it out and you are operating it as a business, you probably will pay 0 taxes on your rental income, okay? That is just the name of the game behind rental real estate. This is not illegal. This is something that literally almost every real estate investor does, whether it's somebody owning 1 rental property, maybe 5 rental properties, or 5,000 rental properties. It does not matter. Every single person does it. This is why rental real estate builds wealth so incredibly fast, because it's tax-free income. Yeah, amazing, right? All right, but again, talk to your accountant. I'm not your accountant. I can't give you advice. All right. Anyway, let's move on to number 5, and that is tax-free gains. Now, this is different from all of the tax advantages. Tax-free gains means if you own a property for, let's just say, 10 years. Let me give you an example. Let's just say you buy a house today, $200,000. You throw down $200,000 on the house. Let's fast forward 10 years from now. Let's just say that house is worth $280,000. You sell the house for $280,000. Okay, so therefore you have a capital gains of $80,000. You bought it for $200,000, you sold it for $280,000. You get to have capital gains of $80,000 of awesome gains. Well, congratulations, that's a nice gain right there. But here's the thing. If you sell the property in a certain way, you can actually defer that tax liability and you can actually pay 0 taxes on that entire $80,000. It's called the 1031 exchange. Some people call it the like-kind exchange. There's all kinds of different names that you can name this thing, but ultimately it is the 1031 exchange, which is ultimately the tax code it is under, 1031. But yes, you can sell that property using a 1031 exchange, and you can pay zero taxes on that $80,000, provided you roll it into another property, and you can defer the taxes forever, essentially, right? So anyway, that's a totally different topic. That is a huge one right there, the 1031. We're not going to get into it in this video, but ultimately, it's a tax-free gain. You don't have to pay any taxes on it up front anyway. Of course, all the taxes are deferred, but there's more strategies around that too. If you hold it until the day that you decide to move on from the world, in most situations, that deferred tax that you've been rolling on through all the years would be non-taxable at that point to your heirs. So pretty cool strategy. Anyway, we can talk about that in a separate video. That is a huge, huge topic. We're not going to go down that rabbit hole today. It is a big one. So anyway, these are 5 ways that rental real estate is absolutely amazing. It can help you build wealth incredibly fast. As you've seen, these 5 different ways, the rental real estate literally is just a cash machine. Every single month, it is throwing off cash. I mean, let's just say it this way. One rental property has within it like 5 different cash flow streams, or like 5 different income streams within one rental property. Pretty amazing, right? So anyway, as you can see right here, the power behind rental real estate. I hope this helps you out. Make sure to hit that subscribe button right down below the video. Share this one with your friends, family, social media. Go back and check out any of my other videos here on the channel. I have a lot of videos. I make a lot of videos. I publish them very often here on multiple videos every single day. So, hope you enjoyed this. Enjoy your day. Thanks again for watching. I really do appreciate it. Subscribe right down below the video, and I'll catch you in the next one.